Welcome back to another market closing live stream. It appears that we have another red day. Let's take a look, see what's going on in the bloodiness of the stock market. The stock market's not been very happy lately. Stock market's been a little weenie baby, a little all sad. Got a short, got to buy the puts. Although I have to say, there's been talk, even talked to Ross Gerber about this, great guy, about people having to pay really big fat tax bills. And maybe it's not a surprise. In some sense, you're seeing a sell-off because folks are talking to their CPAs going, yeah, I did really well in 2020. And then it's like, great, you're going to owe millions of dollars in taxes. And people are like, oh, I guess I'm not buying more stocks for a little bit of time because there's a little bit of a problem amount of money. It's entirely possible, especially folks who profit big time from stocks. Usually it's sell something, realize some profits, put it into something else. It's one of the reasons I hate selling because it's all great. It makes for great clickbait and look at the attendees and the profits and all that stuff are great. Giving up 55% to the government. All right, folks, let's take a peek at what's going on. It's pretty red, so we'll start at the green. Start with Wayfair trying to claw its way back up at 4.58%. We got Activision at 3.32. Activision's Call of Duty numbers were absolutely so exciting. Big growth here. We've got Endeavor up 3.11%. We got Lowe's up 2.71%. We got Costco at 2.43. We got Steel Dynamics up 2.23. JP Morgan 1.85. Home Depot's up 1.45. PayPal's up 1.28. Facebook 1.26. Smaller gains here. Apple's actually green now. Volatility index has chillaxed. We did hit some insane volatility, up about 5% today on volatility at peak moments here. And, we have seen volatility settle back down. We've got Amazon's even green right now at 0.7. Peloton's green at about 0.6, 0.58, 0.6. GameStop's hanging out at 159. Let's go ahead and check out the big old losers. So our biggest losers right now, companies like Redfin here, a phenomenal company, down 16%. Phenomenal earnings, down. Rocket Mortgage, big fears of higher interest rates, some more tight margins in the competitive space of online induced mortgages, more advertising required. Etsy down 15% on a triple frickin' beat. Folks, if this doesn't show you the market's screwed up, it's this. It's a triple beat. Beat on top line, beat on bottom line, and beat on estimates and forecasts for Etsy, and you're down 15% the next day. It's pretty bad. It's pretty bad. All right, what else we got here? We got Ocugen down 13%. Momentum move kind of playing down here. Playboy's down 10.5%. EXPI's down 10%. Void on smashing numbers too. I'll add that. Twilio's down 9.64. I mean, you got Uber, Penn National Gaming at $83. Hold on, is she coming up? Tomorrow. Oh, tomorrow. Okay. I saw her face, and I'm like, we can go jump over. That's not a cat thing. I wonder how the flows are doing for ARK. We'll pull it up in a sec. We'll pull up the flows. They can't be good right now. But yeah, wow. Canoes at 738. MP Materials down again, back to 29. Marathon selling off. Invitae selling off. I mean, all these, this is your insane downs. Look at this. 9, 8, 7, 6% down. Upstarts at 91. Nano Dimensions, 639. I mean, this is just becoming a cash grab where it's just like, sell everything. Palantir, sub $20. Enphase, sitting at 120. Pinterest, 5% down over here on Pinterest at $58. Tattooed Chef is down. Square is down. Teladoc's down. I mean, this is pretty painful. It's an entire sector here just getting destroyed right now. Even Tesla went even more negative, down 1.52%. It's intense. Really, really, really intense. What else do we have here? Churchill Capital down 1.2%. Although we are getting a little bit of a rally here into the close. We'll see if it actually picks it up and brings it over $19 a share. My goodness, things are just getting cheap. Ethereum pushing down a tiny little bit. Still at 34.64 though. Still a phenomenal winner. You can't really even say that's a decline. Still kicking freaking butt. Bitcoin, Dogecoin's at 57.5. Really wait. We'll see if we get some more hoopla in the next 24 hours here. You're really going to want to see some hoopla to see a Doge potentially push to $1. But right now we got to break through 69. And so far we failed the test of being able to break through 69 on Doge. Let's go to what else we have here. Airlines are down too. Wow. Airlines are down. This morning, the TSA released a statement that people should expect longer wait times at airports due to higher than usual demand. It's nuts. It's nuts. It's absolutely crazy. Yeah. Wall Street Bets Army on Twitter says more cheap shares coming. I want to disagree, but I won't because I think you're right. I think we are sitting around through September and October. And it is going to be the biggest 6-month lesson for those of us in the stock market. It is going to separate the weenie babies from the diamond handers. And the diamond handers are going to be sitting there, sitting pretty one day. But right now, you can make fun of us. That's for sure. Definitely can make fun of us right now. So absolutely great day to start buying Leaps. This is true. Today is a better day to buy Leaps than when I bought my Leaps. This is true. Today is it's a lower opportunity. Well, why not? I think it's a great opportunity. I think Leaps are absolutely a consideration in a market like this. Absolutely. Let's take a peek though. Let's jump on over to what markets are talking about here, or the mainstream. Let's listen in.
Lobbying the Biden administration in a big way to get rid of those caps. Charlie Gasparino, who's making a big stink here?
It's the New York City Partnership. By the way, if you don't know them, you should. They're a major New York business group. They represent all the big banks, all the insurance companies, all the real estate companies here in New York. Major power player here in New York. And they are making the big push to try to get some sort of coalition of businesses, maybe even labor, trying to convince some more progressive types, and we're
going to pull off this for a moment. We'll hop on over to CNBC again for a sec. See if we get closing bell with Sarah. Let's listen in.
Record close. The Nasdaq is down again, which would make it its longest losing streak since back in October of last year. Though things have improved, Mike, over the course of the last hour. Every sector is now positive in the S&P except for healthcare, and the Nasdaq is almost at the flat line. Any reason?
I wouldn't say there's a specific reason. We got a jobs number Friday morning. Market probably doesn't want to be leaning too far in one direction or another. Also, just the flush in some of the small cap index actually still down, and some of those emerging growth areas and smaller biotechs has been pretty extreme. So, I think the market is kind of bent but not broken as a whole here. And today's, even at the worst, was not at the week's low. So we're talking about narrow ranges here at the index level, but really a lot of churn underneath.
Steph, I know you call it silly season and anything can happen during silly season. That said, do you get a little bit concerned when you see the extent to which big cap tech has sold off following outstanding numbers for most of the big players?
Not really, Wilf, and it's good to see you. I think, even though we have kind of new highs in the Dow and good numbers on the S&P, the underlying story that we've talked about for months now, quarters now, actually, is that you've seen this rotation from from growth to value. I mean, the Russell 1000 value is up 16% year to date, and the Russell 1000 growth is up 5%. And I think the news on tech is kind of getting wrapped up in the growth sell as well, and the high multiple growth sells. So I think the reason why you're seeing the rotation is for good reason, though. And we've talked about it. Endless liquidity is leading to a better economy, a little bit more inflation. The quandary to me is why is the bond market not selling off, right? I mean, you got a 10-year at 156, and I think it is a function of the Fed keeping real rates negative. And also you have seasonality with Japan probably buying at this point in time. So I think, though, the combination of strong growth, a little inflation, and low interest rates is kind of Goldilocks to me. So that's why I have said during silly season, you want to take advantage, and that's actually what I've been doing. I added to Caterpillar, I added to Zoetis, I added to AT&T, I added to Corteva. So a mixture, a hybrid of companies, staying diversified, but leaning on the economically sensitive stocks as well.
Shares of Uber, though, lowered today to the tune of 8.5% after the company missed revenue estimates. On last night's earnings call, Uber CFO warned of tough comps on delivery gross bookings as the company faces reopening uncertainty. But CEO Dara Khosrowshahi was on Squawk Box earlier today, saying Uber is still poised to grow.
We want people to get anything that they want, but we're also very happy when they go back to work, when they go back to restaurants. We win both ways and we stay relevant to the consumer, whether they want things delivered to their home or whether they want to go out, whether it's to a party or to a restaurant or to work. Essentially, we can grow both ways.
So, Mike, down about $4 or so today. I mean, it wasn't long ago it was above 60. It's been quite a big and aggressive pullback for Uber in the last couple of weeks.
Yeah, it has. I mean, part of it does go along with the general move out of these stocks where, you know, the day of profitability, if it is out there in the future, is pretty far out there in the future. I mean, it's pretty tough to model Uber's business as well as they've perhaps done flexibly, kind of switching toward these strategically interesting areas and trying to be lots more things to lots more users. It's not necessarily something that's going to just spin earnings starting tomorrow. So that's one of those issues. And I do think that it kind of gets thrown into that group with sort of less profitable, high concept tech.
Down 8.6%. Wow. New data showing brick and mortar retailers are making a comeback. Courtney Reagan with the details. Courtney.
Hi there, Sarah. So the retail recovery is in bloom. New spending data from MasterCard spending pulse across all payments
this is good too.
shows that total U.S. retail sales grew more than 23% in April year over year, but also 11% more than April 2019, so well before the pandemic. Total spending at department stores is actually up 200% and up nearly 10% compared to April 2019. Jewelry spending is even stronger. Home furnishing remains up from both 2019 and 2020. In-store traffic, though, is still well below 2019 levels, according to Sensormatic Solutions. For example, last week, store traffic was more than 20% below 2019 levels. It was up nearly 320% from 2020, but that makes sense, right? Because many retailers were still closed. Back over to you.
Any sense that this is lasting, Courtney, or how long it could last?
Good question.
It makes sense that with things reopening and with so much pent-up demand from people staying at home and being on their computers all the time, they'll want to go out and shop. I guess the question is for how long?
Yeah, that's such an important question. And I don't really think anybody knows the answers. I know the CEOs are watching the vaccination rates very carefully, region by region, and they sort of think that is the key to unlocking a lot of spending. But how long it lasts, I don't know. I mean, how many times are you going to refurnish your home, right? So it might also be category dependent. But for things like apparel, that's really looking up, both across online and in store, because a lot of the stuff that we had bought a year ago is no longer exactly what may be the most stylish now, which is probably exactly what retailers want, right? To make us think that we have to go out and refresh our closet.
All of a sudden skinny jeans are out. It's like you have to go out and buy a whole new set of jeans.
Which
I still can't decide what kind of jeans I'm going to transition to. I just can't figure it out.
Some of us are more pleased about that than
Taper,
others. You're a big fan of your skinny jeans still.
Well, I was, but I can't be anymore. They're not in. So now
I know we're going to be so uncool walking down the street.
The problem is they were flattering, and now it's just not.
Be a trend setter. Sarah,
all of a sudden, Sarah, after 15 years of that being the mode.
Exactly. What do you do? Just throw them out?
Mike will never throw out his beanpole tight jeans. He just loves them so much. Anyway, we have to move on, alas, because we are in the market zone. Court, thanks so much. Roku.
All right, let's go ahead and pull back here. Let's go ahead and we got about 6 minutes left to the close here. Let's go ahead and get to this sticks. Let's see what we've got going on. We've got a little bit of a rebound happening here into the close. So do keep that in mind. We got, it does look like we may have kind of hit bottom just about 30 minutes ago, maybe, where's this, about an hour ago? Let's see, probably closer to about 45 minutes to an hour ago. Appears to potentially have been where we've seen a little bit of a bottom. So take a peek at this. You can kind of see, the 117 lows here. Those are some of the lowest numbers that we've seen on, for example, something like Etsy here. I'm sorry, this is Enphase hitting a low of 117 and really starting to trend up here and rally into the close. This is potentially still an opportunity, in my opinion, to add. I have added today. I've sent out alerts to those of you in the Stocks and Psychology of Money group for what I have added. I wish I had a whole lot more money to add, but I also have a very big tax bill coming up, which is one of the reasons I not adding as much as I would love to, because I don't want to pay my taxes solely out of margin. But I did add about 6 figures today, and I'm interested in continuing to nibble here. We added a good 6 figures, I think, on Tuesday as well. So it's just been it's been one of those where it's just, all right, you're gonna keep giving me discounts. At some point you wonder, like, oh wow. Is it ever going to turn around? I get the feeling. Trust me. I remember every single day doing streams in March of 2020 going, wow, oh my gosh, really? It's going to keep going down. And it was rough then too, because it's like you start buying at the end of February and it's like the dip keeps going and going and going. It's like, oh, we're going to keep getting money from it. It's just when you get paid, you buy. You get paid, you buy. That's generally a game plan. And especially if you're pushing into those that you have very, very high conviction in. The trouble is when the market's selling down, it's like, well, so many things look like they have such juicy opportunities. And you almost really start narrowing down into your top 3-4 plays in terms of where you are parking money. But look, if one of the downsides is if you have options get obliterated on days like today. You look and you're like, oh my gosh, this is why, when people the other 2 weeks ago, they're like, oh, Kevin's options, they're printing so much money. I'm like, whoa. These are leaps, okay? Like this can very easily be going in the opposite direction. Now it's going in the opposite direction. But the point is, you got to be prepared for that. You buy options and your stock's up 4% on some leaps. You could be seeing, oh, sweet, I'm up 8, 9, 10% on my options. Well, when the market goes down 4%, you're like, oh my gosh, I'm down 16% or 8 to 12% or whatever it may be. So, yeah, this is definitely some pain, lots of pain here. What was interesting though is we're still not yet seeing that crazy pull down on the S&P broadly, right? We go out here towards day, sure, we're getting that flattening here, but we're still not seeing that S&P trend to the downside, where maybe we do end up seeing that kind of correction down to 3,500, 3,200. It's really just certain sectors that are feeling very, very pained. Stop losses, in my opinion, are not something that I do. I don't short the market. I don't do stop losses either. I take all of the buying power that I possibly can get my hands on when the market is falling, and I add it to my high convictions. So, yeah, this is definitely these are challenging times for certain stock sectors and certain stocks, but they create the best opportunities. The more pain, the better for buying. You don't want to buy in euphoric times. You want to buy when there is pain. Sometimes the difficulty is not having enough cash around, though. So what else do we got here? Let's take a look here. We are about 1 minute away from the closing. Big digital down to 1.55, really trending down here. I mean, we hit $4 at one point, and I mean, really trending down, kind of losing some of the momentum here. You've got the consumer discretionaries like Etsy, big pain here. Moving to levels we really haven't seen since December. Yeah, very much. You're getting that back to September expectation. A lot of that over and over and over again. We're seeing that so many different companies. Just maybe these companies have run too far, potentially ahead of earnings and expectations, or it's just more and more shorting and shorts making more profits, leading to more shorting. Let's listen into the close.
Quite a lot to 157. As we do approach the close, it is financials, consumer staples, communication services, and technology, which are the best performing sectors. Those 4 sectors up more than 1%, but all 11 are higher. Healthcare at the bottom, but nothing in the red as we approach the close. 0.8% again to the S&P, almost a full percent, 330 points on the Dow. And the Nasdaq itself up 0.4%, Sarah.
A lot of buying into the close there. Welcome back to Closing Bell, everyone. I'm Sarah Eisen, along with Wilfred Frost and Mike Santoli, CNBC senior markets commentator. Take a look at how we finished up the day on Wall Street at the highs of the day. Up 315 points on the Dow, almost a full percentage.
There's your indices spread. You get green on the indices, pain and tech.
Home Depot, Microsoft, IBM, all near the top of the list. Losers on the Dow, Caterpillar, Chevron, and McDonald's. S&P 500 gaining 0.8%. Every sector finishing green. Not the case just an hour ago. Consumer staples and financials were the biggest winners. Actually, financials and then consumer staples. Communication services also added more than 1%. The Nasdaq closed higher, up 0.4%. It did manage to avoid 5 days of losses, which would have been the longest losing streak since last October. We did end on a high note. And there's the Russell 2000, which was deeply in the red earlier. As you can see, just going positive into the close. So we got all four. The Dow closing at a record high. Investors are now set for another wild hour of earnings after the bell. Brace yourself. We've got results from Square, Roku, Peloton, AMC Entertainment, Beyond Meat. They're all expected in just moments from now. But wait, there's more. We'll also get numbers from Shake Shack, Expedia, TripAdvisor, Dropbox, and IAC. We'll have instant analysis for you of all these results as soon as they are released. Stephanie Ling from Hightower still with us. Tiffany McGee, Pivotal Advisor CEO.
Lots of earnings. I'm pulling up the earnings as we speak, or pulling up the expectations here. Twitter introduces tip jar. Interesting.
You're going, though, between momentum and technology and some of the cyclical plays.
Yeah, that's been the case all week. It's all netted out so far to about a 0.5% gain in the S&P 500, not too far from its highs. So clearly it still reflects mostly being a fitful rotation from some of those kind of secular growth areas where they're not going to have very special earnings growth this year into the more cyclical areas. And people definitely are pricing in a tone of optimism further about the economic acceleration everybody expects. So I think it's kind of a we bent but didn't break, and we have this jobs number coming in the morning, and it seems as if people are going to remain open to potential good news, even though the bond market's doing a whole lot of nothing still.
Tiffany, do you like the action today, the rally into the close, and essentially all three of the indices looking pretty good, despite, as we've been discussing, some of the pullback in the more overpriced tech names?
Absolutely. I mean, rally is a wonderful word. It's great to look on the screen and see green. So absolutely. I absolutely love the rally. We're looking, we've been looking and really.
I'm going to pull off here and just mention I'm pulling up Peloton, Square, Roku. Okay, Peloton is out. Revenue coming in at 1.26 on Peloton versus 1.12 expected. That's a beat. We've got, let's see, that's 3Q. Adjusted EBITDA coming in at 63.2 million versus estimates of 18.3. That's really good. We've got connected fitness at 2.08 versus the estimate of 1.99. Q3 loss per share at 3 cents versus 20 cents year over year. And they will offer a revised full year forecast on the earnings call. All right, so that is a beat on top line and bottom line for Peloton. Peloton beating Dropbox. Dropbox is out. Dropbox comes out with 47.6 million of net adjusted EPS of 35 cents. This is a revenue beat. 511.6 of revenue of gross revenue. So gross revenue is 511.6. The net at 47.6. Estimates for revenue were 505.1. Dropbox also to provide guidance on a conference call. I wonder if this is like a new theme of the day here. Okay, so Dropbox and Peloton, we have beats. We are now waiting for Cloudflare. We've got Beyond Meat coming up. We've got, let's see here. We are waiting for some more earnings here. Coming through. Expedia is going to be reporting as well. It's going to be one to pay attention to as well. Expedia. Okay, there we go. Let's see. We are waiting. Dropbox, again, providing guidance. We are waiting for AMC, waiting for Roku, waiting for Square. Peloton gains 3% in after hours. We've got, still waiting for additional updates here. Dropbox adjusted EPS beats. It's good. Okay. Any others, by the way, on earnings that I'm missing? Any other earnings that I should have up? Is MP Materials reporting today? Oh, it is. MP Materials is reporting today. We'll pull them up as well. Let's go ahead and pull them up. So we got MP. Any other earnings? We will be covering AMC as soon as those are out. AMC is not out yet. And so far, Dropbox and Peloton beat. Okay, Beyond Meat, here we go. Beyond Meat net revenue, 108.2 mil. That is below estimates. That is a miss. A miss on Beyond Meat. That is not good. Net revenue in the US of 80.6 mil. Adjusted loss per share of 42 cents versus expectations of 21 cents. That is a miss by Beyond Meat on first quarter. Net revenue for Q2 forecast is in range of 135 to 150. So matching forecasted expectations, but that is a miss on top line and bottom line. Not good. Expedia revenue 1.25 billion. The estimate was 1.12. That is a beat. We've got adjusted loss per share of $2.02. The expectation was for 2.27. That is a beat on top line, beat on bottom line at Expedia. MP Materials still waiting for Square, waiting for Roku, waiting for AMC. Beyond Meat falls 10% after revenue miss here at Beyond Meat. Not good for a growth company. That's bad. Good thing I didn't buy yet. I was looking at it and I'm like, I don't want to pay a dime over 120 for it, and I didn't buy any. Okay, here we go. Square coming in right now. Ooh, Square, that's a slight miss on net rev. Square Q, and this is just coming in. I only have one line here so far. We got 3.16 billion versus the estimate of 3.37 billion. Slight miss on Square. Waiting for additional details here. Waiting for more details. Peloton sales surge 141% as delivery pressures ease. No word on recall financial hit. That is amazing. The delivery pressures easing is so good. It's almost like we don't even need COVID. We just need these things to be delivered. Okay, Peloton's still up in the after hours here. Waiting for more details on the Square. Waiting for AMC. Dropbox. Again, we did have a beat at Dropbox. Beyond Meat is now down 11% in the after hours. Again, meeting expectations for Q2 forecast, but big miss there. Well, not big miss, but a miss on revenue and net for Beyond Meat. MP Materials just released their statement. Let's see here. Revenue increased 189% year over year. Trying to see if I can get some EPS numbers here. We've got EPS for MP Material. Not sure what the expectation was, but earnings per share coming in at 9 cents diluted. Let's see. Trying to get some more details. It's not. I don't have a good breakdown for MP Materials, so we might have to come back on MP Materials. Fitness subscriptions grew 135% at Peloton. Square did miss on that net revenue, and it is down now 5% in the after hours. Waiting on Roku. Roku should be coming out any minute now. Beyond Meat misses estimates. Again, that 11% fall there on Beyond Meat. Expedia Group to pay off 50% preferred stock issued in 2020. Expedia beats EPS by 26 cents. It's good. Still waiting on some more details from Square to come through here. Okay, here we go. Square's out. But so far, the initial headline was not good for Square. All right, here we go. Square. Wait, I'm not showing up. Here we go. Okay, Square adjusted EPS comes in at 41 cents, 16 cents expected. That's good. Gross payment volume 33.1 bill versus 28.96 billion expected. That's good. That's a beat. Transaction services coming in at 960 million versus estimates of 872. That's good. Hardware revenue beating with 29 mil versus the estimates of 24.3. Where did they miss? Adjusted EBITDA came in at 236 million versus estimates of 103. Gross payment volume is up 29%. This is good. This is the growth we want. How did they miss net revenue? Wait, what? What is going on here? Because now they're saying net revenue is 5.06 versus 3. Hold on. This is nonsense. Hold on. Square announces on-demand alcohol delivery for Square online resellers. What? I don't know. Okay, that's cool, but we need some more information here. Yeah, slight revenue miss. Square net revenue, it's showing at 5.06 versus 3.37 billion now. And Bitcoin revenue, 3.51 billion versus estimates of 2.06. Well, let's listen in here to CNBC. We'll see what's going on now. Yeah, Square's up now. Yeah, I think there was honestly, I think this was a Bloomberg oopsies, because all these numbers are good. They're calling it a miss. See, I don't want you all to think I'm crazy, okay? Look at this. Look at this right here. Square shares dropped 5% after revenue misses estimates. But they deleted the other thing I read off about that revenue miss. And now they're showing this. They effed up. I'll tell you, this is powerful. It goes to show you how powerful this is. The market moves off this stuff, folks. Let's listen in.
Again, about the treadmill recall, which you can be sure will be the focus of that call coming up at 5 p.m. Back to you guys.
Yeah, whatever. Yeah, Square is up 3% now, bobbing around in the after hours. That was really confusing on what I think that was just a screw up. But no, I mean, all of the individual numbers for Square look good. They look very, very good. Bitcoin revenue almost double expectations. Net revenue almost $2 billion more than expected. Correct. Square didn't really, they effed up. They effed up. They just said it. I got an alert now. They effed up. I mean, they didn't literally say that, but they're issuing a correction. They screwed up. Yeah, ooh, that's bad. On Square, too. I mean, like, look, and this is no diss on MP Materials, but it's one thing if you screw the F up on earnings for MP Materials. You don't have the eyeballs that Square does. But reporting that Square missed and then reporting blowout individual numbers, that was an oopsie doopsie there. But because the individual numbers are absolutely phenomenal. Gross payment volume coming in at 33.1 billion versus estimates of 28.96 billion. Transaction revenue up. Adjusted EBITDA over double expectations. Hardware revenue blowing up here at 29 mil versus 24.3. I mean, Square is one of those companies that I invest in, and I'm like, they will beat Wall Street expectations. And they absolutely crushed it here. This is so good. This is such a good beat here. This is very, very good. Peloton beating very nicely as well. Strong beat. Fitness subscription exceeding forecasts. We've got a beat as delivery pressures are wearing off. This whole recall crap, it's a bunch of fugazi crap. Absolutely. Okay, Roku net revenue 574 mil versus estimates of 492. That's a beat. Just out. That is a beat at Roku. That's a very good beat as well. I mean, that's what, 18%, something like that as a beat. Very, very good Roku beat right there. Don't have forecasts yet, but very good on Roku. Really, I mean, these are just across the board beats, folks, with the exception of Beyond Meat. Beyond Meat is getting wrecked. But MP Materials with a slight beat. The consensus estimate was 8 cents, by the way, for MP Materials. It did come in at 9 cents. So slight beat here. Square, let's see here. Square sees second quarter Cash App lap strong gross profit growth of 160. This is great guidance as well. I mean, Square, this is what we're talking about here. This should be Square. Let's see if they're going to talk about Square now. There we go.
At 41 cents adjusted on EPS. That was compared to estimates of 16 cents on revenues of 5.06 billion. Unclear if that's immediately comparable. We're still going through the numbers, but Square popping here after hours, up about 3% here. Back to you, Rolf.
I'll take it. Kate, thank you very much. Steph, on Square.
Square's only down about, Beyond Meat's only about down 3% right now. It was down a little worse on in the after hours initially.
On the cash apps and the seller volumes. The seller volumes actually, it looks like it came in better than expected. The whisper numbers were 65 to 68%. And I was a little nervous that it was a little too high because in print, most people are at 59, 58, 59%. So those are really good numbers there. Stock's down 19% from its highs. So I think the expectations were low enough headed into this print. It's a great secular story. It's just the valuation has always kind of perplexed me. I've always leaned more on kind of PayPal, if you will. but I don't own either at this point.
Stephanie and Tiffany, thank you both for joining us today. Great to see you as always.
Thanks,
Many
guys.
more earnings.
All right, let's pull back over here. Let's see what's going on with the sticks here. Let's see how things are reacting. I mean, Square, this is so phenomenal. Yeah, look at this disaster there of a sell-off and then that recovery there. But Square having trouble holding on to some of these gains. I mean, these are smashing earnings. Smashing earnings. Peloton destroyed it. Square destroyed it. I mean, so good. So good. Market's just shorting a lot. Market is very short. Taxes. And look at that. Peloton back down again. Goes green and back down again. This is not the market to sell in. This is where you go, thank you for reiterating how wonderful the companies that I invest in are. Showing that the earnings are phenomenal. And thank you for giving me a coupon to buy them. These are excellent companies that are not going to stop growing. I'm not going effing anywhere. This is dollars and cents. This is give it time. September, October. I'm very optimistic. All right, let's get a little bit more coverage here. I do want to mention that if you have not yet, make sure to watch Kevin O'Leary roast me. Kevin O'Leary, the video is live on CNBC Make It. So if you haven't seen it yet, go here. Kevin O'Leary reacts to Meet Kevin. Make sure to hit that like button. Make sure to subscribe. I'm on a different account on this iPad, so everything's... not that one. But whatever. Go to CNBC, Millennial Money. Make sure to subscribe. Like that video. And check out and watch Kevin O'Leary give me a little roasting. And some you get to hear him with some Italian accents, too. It's kind of entertaining. So check that out. All right, let's see what we got. Let's listen to Kudlow for a moment. We've hit lots of earnings here. Let's listen to Cud. Okay, that's not Kudlow. All right, fine then. We will go back. Let's see what else. What else are we waiting for on earnings? Oh, AMC. Here we go. AMC just released a letter. AMC. Okay. Just let's see what I can see here with AMC. Okay, well, they make it very bizarre. I will figure this out. Hold on.
2021. It looks like investors responding positively to that news. More on Expedia and its growth in vacation rentals tomorrow when we speak with CEO Peter Kern on Squawk on the Street. Shares higher here right now by 4%. Guys?
Seema, looking forward to that. Thank you. Shares of Twilio falling today following its earnings last night. The company beating on both earnings and revenue, but gave mixed guidance for the second quarter. The stock's up nearly 150% over the last year, though it is off more than 30% from the highs as these cloud stocks get hit across the board. Joining us now for a Closing Bell exclusive is Twilio CEO Jeff Lawson. Jeff, welcome back. Good to see you.
Thank you. Great to be back.
So clearly your company has been a beneficiary of the pandemic and this shift of going online, all these businesses needing to serve their customers and communicate with their customers and using your services. Is that still happening as the economy opens up?
Of course. Don't think of Twilio as a company that was, only relevant for COVID. We are the beneficiary of a decade or if not more long trend for businesses to enter the digital economy and to engage their customers using digital channels. And yes, COVID forced some of that migration faster than it might have happened otherwise, but that is the secular.
I can't get AMC earnings yet. So we are too far away apparently here. We just have an announcement that today reported results ending March 31st, which have been posted in the investor relations section of AMC website. But when you click on it, it's not there. Yeah, so I'll keep trying for AMC.
There's such great expectations for a stock that has run up 150% over the last year. Talk us through that outlook, which has caused a little bit of consternation with such high expectations.
Well, we are extraordinarily bullish.
I'm going to pull off on Twilio. I'd rather listen to this right now. Let's listen here.
There's also a lot of concerns here about competition. Peloton, of course, 2-3 years ago was pretty much the only kid on the block relatively in this space here. Not anymore. I mean, you can go out and buy a lot of different competing products and competing services out there similar to Peloton. How does that affect the future here?
Absolutely. So, second question first about the competition. It's a very good point because we see a lot of major companies that are in private and they're trying to go public. And we've seen rumors about that. For example, Equinox, which owns SoulCycle, very famous boutique fitness, is trying to IPO. In addition to a big Peloton competitor, Icon, is trying to IPO, and they're the makers of Nordic Track. So we think you're right. I mean, the competition is going to accelerate. Peloton is still a leader, but for how long the leadership is going to stay. And to your point about, the lower priced treadmill, the May 27 was going to be the launch date, and that was we saw that as a near-term growth catalyst. But unfortunately, all these plans are now on hold. So it's it's going to be interesting to hear what the company has to say today about their future growth plans post-pandemic.
I mean, always great to get your take. We thank you. As Peloton falls after hours, Amin Benside of Bloomberg Intelligence. We're going to have to wait that earnings call. Of course, meanwhile, we've had other earnings, and Roku, the streaming company, coming in with first quarter net revenue that beat $574 million versus the $492 that was expected. They are giving us guidance for the second quarter. Net revenue will be $610 to $620 million. Better than expected, and two, it also guides better than.
Did cover the earnings here, so we're going to pull off this just for a moment. Let's go ahead and see what else we can cover. I do want to see how treasuries are reacting to some of these earnings, but let's give Fox just a brief listen in here, and I will get this up.
61% increase.
Hey, it's our fellow by the Dipper.
More than they thought even 2 weeks ago. This is perhaps one of the best earnings period ever. Now we know the comparisons are because
y'all remember this guy.
The absolute numbers, the absolute growth has been beyond mind-boggling. So with that in mind, what I love about this kind of period, Larry, when these earnings come in, they beat on revenue, they beat on earnings, margins expansion, they've taken market share, they've hiked their guidance, and a stock goes down. That's when I start making my list. That's when I start to salivate, and it's like, oh my goodness, they're taking them out to the woodshed. Take them out to the woodshed because they don't belong there. And I'm going to put a list together, and I'm going to be looking at these names, and I'm going to buy the ones that are doing extraordinarily well. Because
let's go, Charles.
It's the earnings, it's the market share, it's pricing power that will drive these stock prices much higher. And you already gave us the economic backdrop that's going to make that possible. So I've got three names I'll share with you. One of them is Steel Dynamics. This morning, iron ore prices, spot iron ore prices, hit an all-time high. You talked about oil being part of the global recovery. So is this. With or without infrastructure, I think you're going to see these industrial metals, particularly steel, continue to go higher. This is a stock that I absolutely love. The earnings estimates go up almost every other day, and the street cannot keep up. So that's one I happen to love. Bloomin' Brands. We're going to hit these restaurants. We're going to hit them hard. Bloomin' is a great restaurant franchise.
Wow.
I happen to love
some unique picks, but Steel's been great. I actually bought some Steel options back. We talked about this in the course when there was a rumor that they might be partnering with Tesla on the Cybertruck Steel.
Trucks on the road, and they're moving around, and they're taking things everywhere. We just had a massive takeover in Kansas City Southern, which is a rail, but it underscores just that how amazing. We know the transportation index is through the roof. It all needs to be tied together through logistics. So I'm really confident about that. I'm confident overall. We'll have an amazing jobs report tomorrow, probably the best single month ever. And
steel manufacturer, not steel.
On that last point quickly, trucking is perhaps the best correlated with the overall economy and the GDP. Now, for some.
So in case you don't remember this guy.
What's happening? First of all this whining by Wall Street is making me sick. 140% of GameStop was short. GameStop was short. You can't allow Wall Street to short 75% of a stock, crush these companies into the dirt, thousands of stocks into the dirt. Then when the individual makes money, everyone's entrepreneurs. I have a kid who bought a house, paid $50,000 and bought a house. After decades of the short, you have to accept the fact that individual investors are playing the same game that you're playing, and now you're losing.
Here we go. Come on. Push it. Buying the dip. Buying the dip. Here we go. Come on. Push it. Buying the dip. Buying the dip. Here we go.
Man, this is just legend.
$8 trillion in unemployment benefits. Yeah. Last month, it was $540 billion. February of last year, just $25 billion. And that's not counting the STEMI checks or anything else. So There's just so much free money out there taking the will to work away from a lot of people. And if you had to decide to hit the road and drive a truck or sit at home and get a paycheck, what would you do, particularly, if it was made available to you? It's just people taking that latter choice.
You know what I say to Washington, Charles? You know it. If it ain't broke, don't fix it. Keep your hands off. You got a great looking boom here. Let markets work, right? We'll all live happily ever after. So stocks are going higher. Last thought from Charles Payne. Stocks are going higher. Yes? No?
Stocks are going higher. The economy is looking fantastic. The only threat to our economy, and you already mentioned it, is a government that wants to remake who we are as a nation. Everything being put forward has nothing to do with the economy and everything to do with government control.
And it's a pleasure to talk stocks and the economy with no politics. I love that, Charles. We have to do this some more. Really.
Larry Kudlow, talk about stocks without politics? Oh, man. No, Charles the hero here. That was a good piece. I really like that. It was a really good piece. Absolutely. All right, folks, what we got here? Beyond Meat's down 6.28%. We got Carvana, not good for the used car market, down 3.13%. Bed Bath & Beyond down 2.65%. Peloton down 2.77%. We have on the winning side MP Materials up 7.34%. Roku up about 5.91%. GoPro, Cloudflare, Dropbox, Square, Yelp all up slightly though. Yeah, Square not as high as we were during the initial corrected earnings beat there. So really, really incredible. MP Materials moving very, very nicely after earnings here. We'll see how much of this holds. Very, very neat. Remember to go to meetkevin.com/support, drop your info there, and stay in touch with big updates. I really want to do, like, if I were ever to do rallies for the Gov thing, I want to invite y'all out to California, because I'm also going to be talking about principles around building your wealth. I want to incorporate wealth building into my message. Building wealth through owning real estate, building wealth through owning equities, owning crypto, whatever. So that'll always be incorporated into my message, because it's so key, and it's something that our country doesn't do. Our country doesn't understand that you must build wealth to get ahead. Otherwise, you get destroyed in this country. Just destroyed. All right, what else we have here? All right, well, closing bells on commercial. Codlow's on commercial. Everyone's on commercial. What is this crap? Let's see here. Okay, well, Bloomberg's not.
This is Bloomberg.
You know, I swear they coordinate. AMC's out. Let's go. We'll cover AMC then. All right, hold on. Ugh. Oh, yeah, AMC. Okay, here we go. AMC consolidated attendance was 6.8 million, down 89% year over year. AMC revenue coming in at 148.3 million versus expectations of 156.3. That is a miss. AMC posts $567.2 million loss as film fans trickle back. Adjusted loss per share of 142. Expectations were for a 131. That is a miss on the top. That is a miss on the bottom. I do not do covered calls. Nope, I do not. I take my money and I buy my shares, and I don't want to get kicked out. I'm going to start singing. You know, I got a microphone. We can do it. See? Look. It's branded too. I just gotta put like a nice little cover on it, and then we can start singing in here. We'll mix. We will do whatever it takes to make sure you don't paper hand, sissy hand, and take the side of those hedge fundy suits. You gotta add. The wise one will add. All right. What else? Roku. We talked about Roku. Yeah. Okay, Bloomberg, you don't have to say you screwed up that many times. We know. Correct. What else here? Ooh, Weiss Law LLP investigates Peloton Interactive. Ooh, another attorney coming out of the woodworks to file another lawsuit. Ooh, gotta keep shorting the stocks. Gotta make sure the stock keeps going down, so let's file some more lawsuits. Should be a scam. It should be illegal. Should be illegal to be shorting a stock and then file a lawsuit against it. Cloudflare sees okay, Cloudflare revenue coming in at 138.1. We've got a beat on revenue, EPS in line at 13-cent loss per share. MP Material beat by a penny and actually doing very well here in after hours on the penny beat. EXBI missed on a penny and fell pretty well today. So what else? We need more news. Is Peloton tanking now because of the lawsuit? That'll give me the opportunity to buy. I've been wanting to buy it under 90. I'm sorry, under 80. But every time it's under 80, I miss the opportunity to buy it. Oh, here we go. It's going to happen. Oh. It's going to happen. Let's go. Down. No. Don't green candle. Get down. Get down, dog. Down. Hold on, let me put a limit in really quick. And log in. What is this crap? Hurry up. Yes, stupid. 79.91. Okay, let's see if I can get it to execute. That'd be so cool. Yeah, buy. Let's see if it'll go. Okay. Oh, it should execute there. There we go. It's at 79.99. That's where I put my limit. There we go. That'll add to my buys for today. The other ones I already sent out in alerts to course members. Okay. Perfect. Keep going down, and I will add more. Okay, where were we? So, yeah, so my order definitely executed. It is down like 30 more cents since then. Let me see what I went through. Yeah, 79.99. That's what I got. And now it's going down more. I didn't load the boat with as much as I wanted to, just because it is on the downtrend right now. So I'm gonna watch this. Do I hear 75? Do I hear 75? Can we get more? Can we go lower than this? Can I get another $4 sell-off, please? I need a bigger coupon, please. What else is going on? What else? MP Materials is up 3.96. You know, if you watch my MP Materials interview, they asked me if I'd be down to hit the dynamite. I kind of want to do that, but I don't want to push a button. I want it to be the dynamite that you can like take the lever and then go like, that's what I want. And we got to film that. That would be fun. Poor Fiery says Peloton is nothing but risk. Then short it. I dare you to short it. I dare you. Buy some long puts on it, why don't you? Put your money where your mouth is. Peloton 79.40, 49.20. Do I hear 78? Can I get those red candlesticks down more? All right, what else we got? Okay, Fox is talking about the science behind climate change.
Increase. I mean, why are they going crazy over this? That's all I'm asking.
You know, I once asked the guy who was the...
Oh, man, you know, it's people like this that are going to make me freak out. That's it. You're going on screen because it's pissing me off. Future governor of California openly supporting the company who killed a child and possibly committed securities fraud. You're nuts. You're nuts to say something so silly. It's nonsense. You can support a company that had an accident. The company recalled 125 1,000 treadmills and offered refunds. Things happen. My heart goes out to the people who were injured or the pets who were injured and the one child that died. I have 2 children. I couldn't even imagine that. But folks, you can't say something like that. That is so misplaced. Securities fraud. Why don't you join the attorney weenie baby shorts and open a real short position? Put your money where your mouth is.
An existential threat, or that we're in a climate crisis or an existential climate crisis. That's what I deny. And I'm learning from you. Now, let's go through. In your book.
Okay, Larry Kudlow, you pitch this guy's book while denying climate change. Whatever, man. We want to know about the stocks. We're not here to talk about climate. We're here to talk about stocks. Unless you want to talk about Enphase. Then we can talk about climate. All right, what do we got here?
Inched up a bit. In fact, break-evens continue to rise. Still, the market is like really convinced that the Fed is going to be on hold a long time, not jack up those short-term rates. Could that change? You know, what if we got that 2 million that one analyst from Jefferies is predicting tomorrow? Could that be a potential monkey wrench where suddenly people start betting on faster tightening or faster tapering?
Totally. And I think that's where you're going to have to look at the margin, right? We're talking about margins of beats now for earnings. You have to talk about margins of beats now for payrolls as well. You're expecting, I think, 1 million is the consensus, or just shy of 1 million.
No, it's 1 million.
Well, yeah. Now it's 1 million.
Right,
but I mean, people are expecting that to be a number that's beaten, and it could be, once again, a question of the margin of the beat, and that's where you're going to see the action into yields.
Yeah, and I mean, we should point out, I mean, there's like basically about 30 economists surveyed by Bloomberg that have an estimate of 1 million or more, and that Jefferies economist at 2.1 million.
A legend if that turns out to
I
be
mean,
right.
seriously, right. Well, we'll definitely invite them on the program if they get it right. Coming up here, we are going to talk about U.S. employers in industries, hospitality, manufacturing, everything in between, complaining about how they can't find workers. We've seen this anecdotally all over the place. People putting up signs talking about the labor shortage. Seems like
need more people.
I don't know. Let's talk about it next. This is Bloomberg.
Okay. All right. Before we leave, we got to do a tweet. Okay. I need your help. We got to do a tweet. When I get forced to pick a party to run for governor, who's going to leave? Unsub and unsub. Come on. Unsub and weenie baby out. Weenie. Okay. So if not my party, I unsub. Verse, I'm not. This is why I need y'all. Living. Okay. You got to vote in that. Where was it? Profile. At Real Meat Kevin on Twitter. I need you. When I get forced to pick a party to run for governor, who's going to leave, unsub, and weenie baby out? If not my party, I unsub. I'm not effing leaving. Go make your voice heard. Oh yeah, and there. BTW. Oh, well, that grammar screwed up. Whatever. Let's do that again. Independent. Won't work. Fine. All right, we'll see. Okay, so if you want updates on campaign, make sure to put your info in at meetkevin.com/support. Thank you. Love y'all. I'm going to go now. Before I get really pissed about these shorts. We'll see y'all.